On the call this morning, S&P futures are negative, down 2% as two Fed governors suggest the Federal Reserve can no longer support U.S. markets, while Morgan Stanley cuts global growth forecasts, saying the U.S. and Europe are dangerously close to a recession. European markets fall 2% on a Wall Street Journal report that suggests U.S. regulators will increase scrutiny over the largest European banks. Japanese exporters lead Asian markets lower, down 1.5% as the yen approaches post-World War II highs. I'm Jill Malandrino, and the morning call starts right now.
Good morning. I'm Scott Redler, Chief Strategic Officer with T3Live.com.
And I'm Jill, and together we bring you the morning call. Scott, yesterday and even the beginning of the week, it felt like August trading. Volumes were a little bit low, the market quieted down a little bit. Then I wake up this morning for the 4:15 run, and we're 24 handles down.
Yeah, this is a very dangerous time. You know, we had that huge violence a week or so back when the market declined over 20% from the highs or so, and then we had the snapback. And so in the last few days, it's felt as if we were getting back to normal, but this by no means is a time to get sloppy. There are some traders that, like, I went to the beach yesterday, midday, it was a beautiful day, and some people left and they had some positions on. Then you come in today, no matter what size, you get hurt. This is not a time to get sloppy. This is a time that if you're involved, you have to be even that much more disciplined, because it seems like anything can happen.
Right.
So at this point, we'll take a quick look at the SPX. We'll look at the chart. Here is that head and shoulders top. You have the left shoulder, the head, the right shoulder. This was that broken neckline. And here we came down to about 1101. Then we had that 100 handle rally. Okay, now we're trying to hold higher. The market's trying to figure out if we can go back and retest bigger levels of resistance at the neckline, or do we break this level of, right now I'm looking this morning around 1168, and if we do that, we could easily retest this 1101 area, and then maybe below if things continue to deteriorate.
So Scott, how are you trading today?
Today what I'm going to do is, since I'm coming in flat, I would have loved to have been short, but at this point I wasn't sure if they would move higher. I'm going to look at the key levels. Okay, I'm going to use the Fibonacci retracements again, which we talked about earlier. So if you take a quick look here, I'll put them in. They're really good and reliable. They show you key levels. I will not trade any of the noise today, because today is one of those days that it could really get volatile. So right now I'm looking right here. That 38.2% retracement is 1168. That's right around where we're opening. So I'm going to see if we could hold here. I'm going to buy some versus that level, but if we break that level, next level I'm watching is around 1155.
So we're sticking to our discipline. We need to be nimble.